Good morning, Carl. Happy Monday, everybody. Flattish open, but the fundamentals about as good as you could possibly ask for. And the cyclicals are back leading today. So energy is back up. Bank stocks are back up. Industrial started up. They're flattish right now. Tech's been a little bit weak today. We've seen some weakness in some of the semis like Nvidia, Microsoft, which is going to be reporting, Oracle down a little bit, but not much. And there you see the Crane shares, China Internet down 7%. That's a 52-week low. Of course, those stocks, many of the Internet stocks, many of them trading over in China as well as here, all to the downside. When I say the fundamentals are about as good as they get, well, we've been emphasizing how much earnings are beating expectations, 17, 18, 19, 20% beat in earnings. But revenues have also been beating rather dramatically by 4, almost 5%. That's unusual. Historically, revenues beats have been very, very modest, 1 or 2%. But in the last several quarters, they've been going up 3 and now still 4% in this quarter. At the same time, Q3 and Q4 estimates are also rising, although not as much. So you got rising earnings, decelerating, but still rising with revenues very, very strong. This plays into a very, very big, important cycle here. So earnings rising but decelerating, revenues stronger than expected. There's concerns about higher costs, but because we have higher revenues and because the prices have been rising to offset the higher costs, the margins have remained near record levels. We have 13% margins in the first quarter. That was a historic record for the S&P. It's been 9 to 11% in the last 5 years or so. Now we're near record. This quarter, 12.8% so far. Still near a record level. When you combine rising earnings, rising revenues, and margins that are stable near record levels, that, folks, is why the S&P 500, why the broad market is sitting at new highs. In terms of earnings, I know we're obsessed with Tesla. I know we're obsessed with Apple, and we should be. But I tend to look at the big global industrials. That's what you want to look at. Honeywell had great numbers last week. 3M's going to report on Tuesday. This is another one of those big companies that sell across many, many different industries because they know what's going on in the global economy. That's why you look very carefully at what the earnings call is like. They can speak to the global economy, what's going on. We're expecting organic revenue growth 18%. By the way, that's what's important with a lot of these companies, the revenue growth for the big industrials. It was 7 or 8% in the last quarter. So they're still talking about numbers that are going up. UPS is kind of the opposite. Remember, the UPS was one of the big beneficiaries of the pandemic last year. So there's a sense UPS might have decelerating revenue growth. But remember something, UPS surprised everybody in the last quarter with numbers way above expectations. So maybe decelerating revenue growth, but the earnings are still going to be very good. And if they get anything close like the last time, there was a huge surprise, and you see that big move up there in UPS. As for 3M, the important thing here, they did very well overall here, and they're still trading at a very reasonable multiple. I'm just looking at it this morning, 18 to 19 times 2022 numbers. That's a very good multiple. That's not high at all. One of the big problems with some of the other global industrials, for example, Honeywell, well, that's trading for a lot higher multiple. They were up 25 times as opposed to 18 to 20 in the past. So we got a very, very reasonable multiple on 3M and the possibility for some outstanding organic revenue growth. Keep an eye on that one. Carl, back to you.
Shepard Smith here. Thanks for watching CNBC on YouTube.